This is Alan Bush with ADMIS. Seeing stock index futures trading higher in the overnight trade. This linked to news that the Bank of Japan has increased their asset purchase plan by a much greater than anticipated amount. So this basically is an easing of credit, very similar to what the Fed is doing with our quantitative easing plan here. However, a lot of these gains given back with the jobless claims report coming in higher than expected. That was kind of a surprise, up 28,000 on jobless claims. Also, we will have earnings season starting next week with Alcoa on Monday, and it looks like earnings for the S&P 500 companies could show their first quarter-to-quarter decline since 2009. We are coming up against some seasonal pressures in stock index futures, so I'd be very careful in here. Also, some of the underlying trends a little disconcerting. For example, the Russell 2000 is starting to underperform. That is considered to be a negative influence. Usually the Russell is a leader to the upside, and that has not been the case now for the last week or so. Also, we're seeing the Dow Transports underperforming. That also a sign of caution. Over in the currencies, seeing the dollar index making new highs for the move as interest rate differentials continue to favor the US dollar over other currencies. We had the Bank of England maintaining current interest rate policies at their meeting. The European Central Bank also leaving policies unchanged at that meeting. However, the big news was the Bank of Japan showing a big increase in their asset purchase plan, much more than doubling what analysts had expected. This taking the yen sharply lower, over 300 points lower against the US dollar. We continue to believe that the dollar index will advance longer term, and we believe that the yen will continue to come under pressure. Also, it is likely that the British pound will weaken as well. Over in the interest rate markets, we are seeing futures higher. This directly linked to the Bank of Japan's asset purchase plan, not to mention the jobless claims report coming in on the weak side. Starting to see some signs that the U.S. economy is slowing. Of course, this would be friendly for the credit futures markets. I'm thinking, though, that any major flight to quality rallies should be used as selling opportunities, so I would need to see very good gains, 2 to 3 point full gains at the long end of the curve before I would start trading from the short side in this market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.